Morning, everyone. It's Credible Crypto here. I wanted to make a market update and talk about a couple of other things. It is Sunday, February 10th at around 10:20 a.m. today, and there's a few things that I want to cover in this video. So first, I want to cover a general market update, talk about what we've been seeing over the last few days. There was a little bit of confusion in my Discord. I want to clear that up with what I'm expecting here in the days to come and what I'm expecting here in the short term. So I'm going to talk about the immediate next moves that I'm looking for in the short term, what I'm looking for over the next month or so, and then a couple of other things that I want to talk about regarding particular counts that I've been talking about in the past that have been invalidated or thrown out. And I want to go over a couple of reasons for that because I had some people asking me about certain counts, and some people are still counting the particular moves this way, and I want to talk about why I'm not counting it that particular way anymore, just to kind of give you guys some insight into the reasons why I am no longer counting it the way some others are. So we're going to start off with talking about, this was one of my prior counts that I talked about, and maybe 3 or 4 videos ago. I threw it out maybe a week or 2 weeks ago. Based on, once we dip below this trend line here, I kind of threw it out. And there's some that are still going by this count as a larger triangle. They have it drawn out like this, as a larger triangle. and there's a few reasons why I don't particularly like this count anymore like I used to. So when I did have this count drawn out, and let me go ahead and go back. When I did have this count drawn out, guys, the way that something that I noticed, it's not necessarily a rule per se, but it's something that I noticed that tends to play out quite often, that gives more weight to these triangles, these Elliott wave triangles, when I'm seeing them, and that is that the angles of both the the top and the bottom line right here that we see, this top trend line and this bottom trend line, they tend to be symmetrical. So if we have a slope, a negative 19-degree slope on the upper trend line, I like to see a positive 19-degree slope on the lower trend line. Now this isn't required per se, but it's something that I like to see, and when I do see it, it gives me a lot more confidence in that particular structure being a triangle, a symmetrical triangle. So for example, in our drop from 6,000, right above the 6,000 level that we dropped from, we had a perfectly symmetrical triangle that had formed, and that gave me a lot more confidence in a downwards breakdown, which we ended up getting. So that's something that I look for, guys. And what we saw here is another thing that I look for. Sorry, one more thing that I look for is off these top trend lines and these bottom trend lines, I like to see strong wicks hitting them. So I like to see them getting touched and then rejected, touched and then rejected, touched and then rejected. That's another sign that we're tightly coiling in this symmetrical triangle. Now in this particular scenario, we got a wick off this first touch. The second touch is what established the degree of this trend line, and then I mimicked that here on the bottom to get this trend line. And as we can see, it wasn't respected here. We fell through the bottom, tested this red support zone, and then eventually we popped above it. But once we made a break below this bottom, and once this particular move here started getting a little bit more complex, that's kind of when I threw out this particular count as my primary, as one of my primaries for the bearish count. And so I did throw that count out after a while, and we reverted to that ending diagonal, which ended up becoming a complex WXY XZ correction. But the point is that this count is no longer, I wouldn't say it's technically invalid. It's technically still valid. I just don't like the symmetry of it now. This line would have to come down here for this to be a symmetrical triangle. This angle is much less steep than this angle on the downside, and then the symmetry of the waves inside just doesn't look appealing to me. So this is no longer, a symmetrical triangle is no longer one of my primary counts, or my primary bearish count for that matter. But now let's go on to the current market scenario, guys, and what I'm seeing today and with our current counts. So if you guys recall from my last video, we had formed a WXYXZ correction, what I believe to be a WXYXZ correction, and then we got our pop to the upside that was very much expected. Now another key thing that I want to talk about, guys, as we know, this WXYXZ correction was forming what looked to be a falling wedge. Now there's a very big difference, guys, and this is a key distinction that I want everyone to understand. There's a very big difference between a falling wedge pattern and a leading or ending diagonal structure in Elliott wave. Just because something looks um, like a wedge-like shape doesn't necessarily mean that it's a diagonal. Now we know that in Elliott wave, a leading or ending diagonal will form a structure that has two contracting that is bounded by two contracting trend lines, which is it looks very much. I mean, it is pretty much a wedge structure, but all wedges are not going to be leading or ending diagonals, whereas all leading or ending diagonals should take the shape of a wedge, if that makes sense. So a wedge does not necessarily imply a leading or ending diagonal, but all leading and ending diagonals will be formed by two contracting trend lines, unless in very, very rare cases and cases that I have not actually seen yet, we get a ending expanding diagonal instead of a contracting diagonal, which would look something like this. And again, it's not something that I've seen, and it's not something that is seen very often by any Elliott wave practitioners, but it's something that is out there. But generally, guys, these leading and ending diagonals will take the contracting form, and they will look like wedges, but that doesn't necessarily mean, especially in this case, that all wedges are going to be leading or ending diagonals. So in this particular case, we had a wedge pattern, a classical falling wedge pattern, which tends to break to the upside. But based on our count, this was not actually a leading or ending diagonal, even though it had the same shape. It was rather a complex correction. So I just want to get that little tidbit out of the way because that's very important as well. But anyways, we broke to the upside, and now people are wondering where we are. You guys already know that I filled some non-leveraged longs down there at the low, and now I'm looking to add on the dips, as I said in my last video, and the question is, where should we add on those dips? And what am I seeing here in the short term? So in the shorter terms, guys, what we want to see is we want to see a clear 5-wave move off of these lows, all right? Actually, let's talk about, before I get into the short-term stuff, let's talk about the bigger picture, and then we'll dive into the short term. I think that'll make more sense, and it'll just make more logical sense for you guys to understand the entire picture in a better sense. So again, we want to talk about the big picture, right? So the big picture, let's start off with the move off the lowest lows that we've had so far, $3,120, which for some reason, and I don't know why, people are already claiming is the bottom of the bear market. There's no evidence for that yet. We haven't made a higher high in the daily. Let's not start calling bottoms until we actually get some higher highs, guys, because that's what happened at 6K, and we saw how that happened. So so from this lowest low here, if we start a count, right? So we're going to assume that that this entire drop down was either a 5-wave structure to the downside, so an A leg, an A leg, and then we're now getting a B leg before a C leg, or we can assume it was some sort of a complex W, X, Y, X, Z, right? Whatever you want to call it, we can assume that it was a major leg to the downside and that we are now seeing a correction to the upside, right? And the reason we say that is because we had a strong move on high volume to the downside. The volume started tapering off as we got lower, and we made a strong push to the upside, breaking these lower highs, making a higher high on this smaller time frame on high volume, and now we had again a consolidation on lower volume and again a push up on stronger volume. So basically what we're seeing now is a correction of this down wave to the upside. Now the question is how high is this correction going to go, and what can we expect after? So as I've said before, and as I currently maintain, I do believe we're going to ultimately see lower lows in 3,100 by the time this bear market is over. That being said, sorry guys, I got a phone call. Where were we? So yeah, so as I've maintained for a while now, I don't believe that we've seen the lows of the bear market. I believe we will make lower lows. That doesn't mean that we can't get a relief rally in between, and I think one is much needed after seeing a 50% drop from the $6,000 level. So I do believe that we're retracing here, and here's what I think will happen. Of course, we're going to play it day by day, but just to give you guys an idea of what I'm looking at in the bigger picture, starting off of these lows, there's two things that we can assume. Either that this was a 5-wave impulsive move to the upside, which I'm not the biggest fan of, or that this was some sort of a complex WXY to the upside, which I prefer. Let's make that a WXYXZ. which is what I prefer, honestly, based on what I'm seeing. But the point is that this was one move to the upside. Whether it's corrective or impulsive, we're not quite sure. It could either be, as we know, an ABC can either take the form of an ABC or a WXY. They both mean pretty much the same thing. The only difference is that the W is going to be that complex structure, whereas the A is going to be that 5-wave move to the upside. So in both cases, after that first leg up, we get this X wave or this B wave, right? And this X wave or this B wave is this move right here, this WXYXZ complex correction. And that's really what it's going to be in either case. In both B and X, it's going to be some sort of a complex corrective move, all right? Now, what follows that is going to be either a Y or a C leg, and this is where I want you guys to pay attention to at the moment, right? So I believe that we saw one leg of a corrective move here. I believe that we saw a B wave or an X wave here, and I now believe that we're starting the third leg to the upside here for this giant corrective structure, which is retracing the move from 6,000 down to 3,000, right? Now, if this was an A wave, right, if this was a 5-wave move, then we would expect this leg to also be a 5-wave move because we'd be forming a simple ABC, right? If this was a complex W correction, right, and this was an X wave, we'd expect this move to be a complex correction as well, so a Y wave as opposed to a simple 5-wave move, right? In an ABC, the C wave has to be a 5-wave move. In a WXY, this Y wave will be some sort of a 3-wave structure, right? So the key that we're looking for now is, will this move up be a 5-wave structure or a 3-wave structure, right? So what I'm looking for, and now this 3-wave structure that we could be expecting would take the form or shape of an ABC to the upside, which means we could get a 5-3-5, or it could take the shape of a more complex WXY, which means we get an ABC and then a 3-wave move and then another ABC. Right, so what we're, and then in the simple case, if this is actually a C wave if this was actually an ABC and this is a C wave of the ABC as such, then we would expect this entire leg to be one simple 5-wave move, right? In which case, we would look for something like this. This 3 would probably be a lot stronger. 3s are normally the strongest. And then a 4, and then a 5, right? So regardless of whether we're looking for a 3-wave structure here or a 5-wave structure here, let's look at our targets, right? Now my targets for this move to the upside would be determined as such. So the very basic target that you can create, and it's very straightforward and simple, is a simple 1-to-1 extension of this prior wave. So we take the fib measurement of this leg, and then we project it from these lows here, these local lows, right? And that'll tell us what the 1-to-1 extension is, which falls right at 4,400. And it will also tell us what the 1 to 1.618 extension is, which would be the next typical target at around 5,000. And the most conservative target would be the 0.618 extension, which gives us $4,020, right? So those are our 3 target areas. Now, we want to look for confluence. So if we go to the daily chart, the daily chart here on Bitcoin, actually let's go to the 3-day chart here on Bitcoin. I've marked out, not even the 3-day chart. Let's go to, where did I see that order block? So it might have been the 12-hour. Yep, there it is. Yeah, there it is. It's actually not the 12-hour. This might be the daily. Yes, it's a daily. So I looked for an order block, which is pretty much in a sea of red candles, a green candle that occurs. So an up move before another down move that makes new lows or breaks market structure. So in this case, if we go to smaller time frames, we can see that we had this consolidation pattern and then we ended up breaking to the downside. So this consolidation pattern is what we're aiming for, and it's just more clearly visible on the daily with this green candle that we see. So that level is between 4,300 to 4,500. And as we know, guys, from our fib extensions, a perfect 1-to-1 extension of this prior leg gives us 4,400, which is smack dab in that green level. So we're looking for confluence, meaning different factors pointing to the same target. And that's what we're seeing here, guys. Confluence of this one-to-one extension that matches with this order block at around 4,400, which is right between our target of 4,300 to 4,500. So this is my initial target, guys. I'm targeting a one-to-one extension of this leg to the upside for this bullish move to the upside, right? Now let's see if there's any other confluence just for fun. If we take the entire fib extension of this move down, right, we see that again, this green zone is a perfect 38.2% retracement of this entire wave down from 6,000. Now we know when there's particularly strong moves in any market, the retracements tend to be shallow. We like to see a 61.8% retracement in downwards moves. That's ideal. But we know that in strong momentum situations like what we are in now, the retracements tend to be more shallow. So a 38.2% retracement is very common, and I like that it matches up again with our one-to-one extension and with our green order block. So this is the sweet spot that I'm targeting, guys. Now, if we happen to get above this level, the next logical target would be in the 5,000s, would be this little block here, which is around 5,500. We may not get that high. We may just hit the 161.8 at around 5,200. But that's honestly, this even is a long shot, in my opinion. I don't think we're going to get up here, guys. I think this is where we're going to stall, and then we'll continue down to make new lows. However, if we manage to get across this level, then this would be the next logical target, somewhere in the 5,000s, all right? But again, let's take it one step at a time. Right now, my focus is on this green block right here. All right. So that is kind of the bigger picture of what I'm looking at for now. Right now, how this is going to play out. If we go again to the shorter time frames, what I want to see, guys, is we're going to go by the process of elimination. We don't know if this move up is going to be 5 waves to this green zone, or if it's going to be a 3-wave move to the green zone. Right. So what we're going to start off looking for is this initial 5-wave move to the upside. Right. And what we have so far is we seem to have, off these lows, a 1, 2, extended third, a fourth, and then I'm looking for one more 5th leg to complete this initial wave up, whether that be the A of an ABC, okay, whether that be an A of an ABC, whether that be a initial first leg of a larger WXY, or whether that be the first leg up of a 1, 2, 3, 4, 5, right? We don't know which of those it's going to be yet, but it doesn't matter at this point. I just want to see if we get a clear 5 waves up. Now, if we don't get a clear 5 waves up, and if we instead get some sort of a 3-wave move and then we correct down to this 3,500 level, right? So if this is a 4th wave, I would not expect us to go this low. It would not be ideal, right? If this is a 4th wave, number one, this doesn't look right. We got a massively extended third. You wouldn't expect the 4th to retrace so deep after an extended third, right? And number two, for a 5-wave move, it would just throw the entire thing off. It'd look out of sync and the symmetry would be completely off. So if this is a 5-wave move to the upside, I'd like to see us really hold this green order block here that I've mapped out. And I'd like to see us make one more push up to get our 5th wave and then come in for a deeper correction, which at that point is fine. If instead we simply continue down from here and hit this 3,400 or 3,480 to 3,500 level without making one more push to the upside, then it would look to me like this is actually some sort of a WXY, guys. And that would be a 3-wave structure, which would eliminate the scenario of this being a 1, 2, 3, 4, 5. Does that make sense, guys? So what we're looking for here, whenever we have Elliott wave counts and we have multiple counts, we simply look to eliminate the counts that eliminate the counts as we go based on updated prior action, and that leaves us in the end with 1 or 2 counts that are very reliable, and that's how we trade Elliott wave. So at this point, we don't have enough information, but at this point, what I'm looking for is either a 5-wave move to the upside, or for us to get a 3-wave move to the upside, and that's going to tell me a little bit more information about what we can expect further up and how I'm going to play it, right? So if we get a clean 5-wave move to the upside, which means we should get one more push to the upside, at that point I'll be looking to possibly go short for a short scalp, or I'll be looking to simply long this area, because then this area becomes more likely as a wave 2 retracement. It basically will affect my strategy from this point on. Currently, I'm in longs that I picked up at the lows, and I'm looking to add overall because I do believe we're headed to the 4,000s, again, that 4,300 to 4,500 level. But in the short term, I like to make some short-term trades sometimes, and based on the wave structure, I may or may not do that, depending on how this plays out. Bottom line is I'm waiting for some more price action to see how I can make some additional shorter term trades aside from the core position that I'm already holding, which is going to be net long, right? So that's what I'm looking for here in the short term. Now, if we look at Bitcoin, it looks like we have a 4 waves, and then I'm looking for a 5th wave to the upside. If we look at RSI, ignore this text here, it's part of a chart I posted earlier, but if we look at RSI on the 4 hourly, we had entered overbought territory. We are now making a slow move down, and I would expect ideally to make one more push up for this 5th wave, at which point we would probably make a bearish divergence and then correct for our 2nd wave down. That's ideal if this is a 5-way move to the upside, right? On the daily, RSI is still just shy of 60, and this 60 level is the key level that I want to see broken on the daily to see much stronger moves to the upside. On Ethereum, we're kind of in the same situation. On Ethereum, we have what looks to be 4 waves complete, and we're waiting for our 5th. That could have been our 4th right there, and we could be getting our 5th right now. But we've made what looks to be 4 waves complete. We could be getting our 5th bounce perfectly off this daily support level right here at 114. I also filled some Ethereum longs at this level as well. And I may or may not let those go after I see if we get this 5th wave that completes, and if we get that same bearish divergence that I'm looking for here on the RSI. Now, again, for Ethereum, 4 hourly RSI is very bullish at the moment. It's starting to curl up. Daily RSI, however, is also below that 60 level. So the best is yet to come for both Ethereum and Bitcoin. Now let's take a look at Litecoin, guys. Lots of excitement on Litecoin. It's just been blowing up like crazy, guys. We saw resistance here in the 40s. We broke through that resistance after initially failing to close above it on the daily. The next day we closed above it, and we're continuing upwards on Litecoin. Litecoin is the only one at this point in time that looks like it may have already put in 5 waves because of this last move to the upside that we got. We can see a possible bearish divergence forming here on the 4 hourly. Price has made new highs. RSI is definitely having a hard time climbing back up to 90s, which is extremely high. It looks like we may get a bearish divergence here, and we may have completed 5 here already for Litecoin. It's not very clear. That being said, I'm not very interested in Litecoin at the moment. It has already made its massive moves. I missed out on that. I'm not going to chase it. I'm going to look to catch those coins that have not yet made the massive moves that Litecoin has made. Now, if you take a look at Litecoin, this is something that's very important, guys. Litecoin on the 4 hourly, the RSI is already in overbought territory, right? That is the same case with both Bitcoin and Ethereum. They're all the same when it comes to the 4 hourly RSI. However, where the biggest difference is, and this is why Litecoin just sped ahead of both Bitcoin and Ethereum, is on the larger time frames. On the daily, Litecoin has already crossed above 60. It's crossed above 70. It's in that overbought territory, and we know the largest moves occur when coins are in this overbought territory on the higher time frames. So unlike Bitcoin and Ethereum, guys, Litecoin has already made its massive move. It's already gotten up into this area, and yes, it can continue higher, but my point is that if you are not already in Litecoin, do not FOMO in at this point. It has made its move. Look for both Bitcoin and Ethereum that are still down under 60 on the daily and that still have yet to make this massive move above 60 on the daily. Now look at this, guys. Litecoin, we had this massive candle on the daily, and prior to that, Litecoin was under 60 as well, just like Bitcoin and Ethereum are now. It was under 60 on the daily RSI, and then once it managed to break above that level, we saw this massive move, guys. And that is telling me that the massive moves on both Bitcoin and Ethereum are still yet to come. It's highly likely that we haven't seen that massive move on both Bitcoin and Ethereum, which is why my focus right now is on those coins as opposed to Litecoin. I'm not too interested in Litecoin at this time. If it makes decent retracement, I may add, but right now my focus is on both Bitcoin and Ethereum, which I believe have yet to pop off and have yet to make their larger moves to the upside, right? So for Ethereum, that means a move above the 160 level, which means we have plenty of space to go on Ethereum. And for Bitcoin, as you guys know, that means a move above 4.1 to 4.2K and ultimately to 4.3 to 4.5K. That's what I'm looking at here, guys, in both the short term and the midterm. That is today's video update. I just wanted to get you guys an idea of what I'm seeing. I'm getting a lot of questions about the big picture and what I'm seeing in the larger time frames, and that is pretty much it, guys. After we make our move up to this 4,300 to 4,500 level, that means that we've officially gotten a higher high on the daily charts here, guys. We made a low, we made a high, we made a higher low, and this will officially give us a higher high. Now, as I've talked about in my other videos and in my prior analysis, this higher high is going to make a lot of people very bullish, guys. Everyone's going to be jumping through the roofs when we make a higher high on the daily. They're going to say, hey, we made a higher low, a higher high, trend change, we're going to the moon. And I simply believe that this will be another bull trap before we see new lows. As I've explained in one of my prior analysis videos, what we want to look for a trend reversal is not simply a higher high. We want to see a higher high. We want to see a retracement that holds the original high, and then we want to see a break of that higher high, guys. That would imply that we're seeing a 1, 2, 3, 4, 5 wave move to the upside, right? So what I'd like to see to really be bullish is I would like to see a higher high, right? And this, I mean, really, as a third wave, it should go much higher than just this level here. So that's going to be the first warning sign. But I'd like to see a higher high. I'd like to see a retracement. And then I'd like to see another higher high, a break of this level, wherever it may fall, right? That is what I want to see, guys, to get very bullish. Until then, what I would expect that this is simply just a WXY, which is going to give us a higher high, but ultimately I believe we'll just come down and break this level here and then fall lower and make new lows, right? So that's a key distinction that I look for, okay? So that's all I have today for you guys for this market update. You guys know what I'm looking for in the short term. You know what I'm looking for in the midterm and what my expectations are for the next few months. Of course, if price action develops that makes me change this expectation, then I will let you guys know. And of course, on the downside, we do not want to see this level get lost. That would be very, very bearish. On Ethereum, we do not want to see 108 get lost. That would be very bearish as well. And if those levels get lost, then something else is going on, and we may not be making a move to the upside, guys. But that is highly unlikely in my opinion. I'm still very confident that we're moving to the upside. However, it's always important to be aware of the alternate possibilities and what could go wrong in a perfect world. So that's why I let you guys know about those levels. If you guys have any questions, feel free to reach out, comment on this YouTube video. I'll try and get back to you guys. Reach out to me on Twitter or on my Discord. And again, if you liked this video, if you enjoyed it, please like and subscribe on YouTube and follow me on Twitter as well so that you guys can get constant updates.